we are going to be doing weekly market forecasts, previous market reviews and breakdowns to see how you can be able to improve and get down into the market every single week and take those opportunities. I am Emma Trades and I would like to welcome you to the Trading Journal. Without further ado, I'm going to go down into the previous week review, but do not forget we are in the festive period. So of course, the markets will have low volume, so we won't have much of forecasts, but nonetheless, let's break down last week and see what trades I took, that I shared out, and what you would have done different. Looking at the previous week, the FOMC week, of course, we had a very bearish dollar pair, right? DXY was bearish. That means that when you're trading GBP USD, Euro USD, gold, or any other currency pair that has USD at the end, we were bullish for most of the week. And when we look at our GBP USD chart, we see that we had 4 bullish days, right? Now, how do I do my analysis when I get into a new week, right? And do not forget, you should have your journal whenever you are doing your analysis or your market forecast for the coming week, right? So, I do trade ICT concepts, and when I'm setting up, because I'm an intraday trader or a day trader, right? So, I first consider if that data ranges, right? So, if the data ranges, now these are data ranges that we look at to consider our most significant PDRAs or points of interest from which we shall formulate our intraday trades, right? Monday was 11th and I've marked out over there. So from Monday, I'm going to outline the previous 60 days, right? But in phases of 20. I'll look at the first 20 days, the next 20 days, and the third set of 20 days. Now within this range of 60 days, I'm looking for the immediate points of interest from which I want to formulate my intraday trades, right? And do not forget, you do not have to trade all the time or every opportunity. You should focus on taking the best trades, right? So for the FOMC week, I did take 2 trades, lost 1 and won 1. So the trade that I lost, I took an early entry and I lost it out by about 2 pips. But it was going into the FOMC, so volatility or the manipulation was of course expected. But coming into Friday to close the week, I did take a 6-hour trade, which leaves me at 5-hour for the end of the week, which is still a profitable week. And as I say, every week is a profitable week when it comes to the Emma Trades channel, and we are fighting to focus and keep it at that. So I've marked my first 20 days on my chart, then I'll go ahead and mark my next 20 days, those are 40 days. Then I'll mark my last set of 20 days to make it 60 days, right? So now that I have my if that data ranges, of course for intraday traders or scalpers or whatever the case you might be, I'm going to focus at the price action within these 60 days, right? Now what do I mean? I want to determine the trend within these 60 days. I want to determine the possible retracement areas, and I want to get my targets within this range of 60 days, right? So when we look at our chart within this previous 60 days, we have this kind of structure, right? I have a high, then I have a low, I can take this, then I have a higher high, right? Then I have a higher low, sorry, higher high, higher low, higher high, definitely, higher low, right? Now that was the structure going into the new week or the FOMC week, right? So it is clearly bullish, which means that I want to look for mostly buying opportunities unless otherwise. So unless the conditions change, if your structure on a higher time frame is bullish, you want to look for bullish trades even on your lower time frame, right? And we shall see how to break down or how to align and formulate this kind of trades, right? So without further ado, I have determined my trend. So now I'm going to go down and look at the current price leg that we are in. Then I'll look for possible, if we're in a retracement or if the retracement leg is done, and I have to look for that expansion leg and how I can get opportunities during the course of the week within that leg, right? So within the most current price action, you can see that we had this leg up, right? Then we had price retracing downwards, and this is where the week closed last week. So the first thing I'm going to determine is what point in pricing are we, right? So why is pricing so important? So even when you're going to a supermarket or you go to buy something anywhere, we always want to buy something at a discount, right? And if you're a seller, you want to sell something at a premium price or when it's very expensive so that you can maximize profits, right? So the interbank traders or the institutions similarly, they want to buy when price is in a discount, and they want to sell when price is in a discount zone, right? So in simple terms, pricing should be an important concept whenever you are going to take a trade. So this means that I want to buy the discount pricing, I want to sell in the premium pricing, right? So I'm going to put my premium and discount pricing tool, which is this for this leg, right? So that's from the high to the low, right? The green is our discount, the red is our premium zone, right? So I can determine that we were in a retracement. Since we are bullish, of course, this becomes my retracement leg from the point over here to this point over here are my retracement legs, right? So within my retracement legs, I'm going to go down and look in the discount on the left hand side and look for the possible areas where I would want to buy price from, right? So as an ICT trader, of course, I'm going to be looking for fair value gaps, order blocks, balanced price ranges, breakup blocks, and all that. We shall get to learn them all in the channel over time, right? So when I look at my left hand side or my left hand leg, the expansion leg to my left, I notice that I do have this order block right over here on my daily time frame, right? So you can mark the order block out. That was the order block that we did have over there. So I mark it out, and of course that means that I want to take my price and take my buy to continue the trend of this order block, right? So having done this, of course, I would go on a lower time frame to refine the order block further and see possible entry levels, right? So usually I want to take trades in form of a swing manner, right? So in simple terms, I won't go too much into the intraday strategies usually when I go into a new week, right? But I do that when the week is not really on my side. But let's see what happened over here. When I go to the 4-hour time frame, I can go ahead and refine this to the next immediate PDRA in the discount zone, right? So I notice that I do have a fair value gap over here, right? So if I have a fair value gap over here, I'm going to change this to my fair value gap, and I'll have that over there, right? So I'll mark out my fair value gap on my 4-hour time frame. I have this over here, and of course I want price to give me a confirmation when it comes into this. Now remember, I did mention that the previous week was the FOMC week, right? Now what's the importance of knowing the news events or how their impact is in a week? Now we have what we call a liquidity injection, right? So as we all know that the market is said to consolidate for almost 70 to 80% of the time, right? But then it has those momentum areas, long-term momentum areas on the higher time frames, not the intradays, right? The intradays, you could gain more momentum during the session opens and the session closes and those interlaps between the London and New York. But when you look at actual liquidity injection, we are looking at the big moves, the 1 hour, the 4-hour moves that you can be even able to see on the daily time frame as well, right? So if I have a news event like FOMC, NFP, CPI, I expect that the market might consolidate for most of the week. But during this news event is when I expect price to actually either complete structure into my PDRA or to move away from my PDRA and hit my draw on liquidity, right? As I said earlier, we are determined that we're in an uptrend, right? So when you're in an uptrend and you're looking at structure, this is what happens. I expect price to form a higher high, higher low, higher high, higher low. So if I find price in a retracement leg, the way we did find price right now over here, that means that I'll want to take a trade, of course, in my right pricing, which will be the discount, and my definite target will be the old high, right? The old higher high, because I want price to violate this higher high and form a new higher high, right? So coming back to the current price that we are in, my clear drawn liquidity was definitely going to be the old higher high, which is right over this, right? This higher high. So that means if our retracement was done, this would be my valid target, right? And I'd expect FOMC to propel price from this order block over here, or the 4-hour fair gap, into this higher high to be our target, right? So FOMC, we did have FOMC on Tuesday, and it fortunately or coincidentally found price in our 4-hour fair value gap. So I did take this trade, but I took an early entry and I got stopped out by about 2 pips, and price went high and hit my take profit, right? But then I did take another trade earlier on Friday, and I'm going to break down how I took this trade, right? So it was a trade I took based on the Asian high and low concepts. So I want to have this indicator over here, the sessions indicator, and this is what we have. So I did share this trade in my Telegram channel, and it's free, it's entirely free, and I did share steps for free. And this is what we had. So moving on to the Asian high, of the Asian range, I did mark out my New York midnight open, or that 3-day open, which is right over here. I'm going to just get the template for that, which was this. So now, how does this work? I always want to sell above the New York midnight open and buy below it, right? So building confidence from a higher time frame, because on my daily time frame, I had taken out previous daily all significant highs that we can see over here. This highs was significant. I expect a retracement, right? Whenever price breaks a high, we expect a retracement. So I was already anticipating for price to form a retracement, right? But I had to get confidence for me to take that trade, right? So coming back to our 15-minute time frame, we did see that price was actually in a long consolidating stage, right? After the FOMC. So you can mark this out as well. You could take it as your accumulation phase over here. We said price was in a long consolidating stage, right? So when I look above my accumulation stage over here or my consolidation, I notice that I do have an order block right over here, or it's kind of, you could call it a bank candle or an order block as well, right? But it's a fractal high we have over here until the 15-minute time frame. So this is liquidity engineering, right? So that means I have a lot of buy-side liquidity resting above this consolidation, right? So what happens is that I expect price to come above this, tap into this order block, and then sell price. So I did share this signal, and it was just that. We did enter from this point over here, and it was a 6-hour trade that we took, right? It was a 6-hour trade, and I do share this often in my Telegram channel. So we took a 6-hour trade, and it was about 70 pips. And basically this is the trade I took, and it did recover my loss because I did lose 1%, and I ended the week with a 5%. Without further ado, going into our festive season, we don't expect much volume in the markets. So we shall be doing the weekly forecasts in our next episodes, probably after the festive periods, just the Christmas periods, the Boxing Day and the New Year's, when we expect to have major moves in the market, and we can open our 2024 trading journals together and be able to report the profitability together throughout the year. Keep it locked on the channel, subscribe, hit the like button. Till next time, I am Emma Trades.